BlackRock owns anywhere between 5 to 20% of the voting shares of almost every single massive corporation in the world. And in just 7 months, they bought 2% of the entire Bitcoin supply. Does that mean they'll eventually control the fate of Bitcoin as well? Let's mine deep. Bitcoiners speculated for years on what the arrival of the first Bitcoin spot ETF in the US would look like. The resounding winner? BlackRock and their IBIT ETF. But BlackRock isn't exactly known to be the benevolent custodian of commodities, shares, and assets that it likes to make itself out to be. One of the ways BlackRock controls companies and what they own is through their large passive investment ETFs. By buying shares of companies on behalf of investors and putting them into generalized ETFs, they gain exclusive privilege to the voting rights attached to those shares. And with those voting shares, they have radically changed the corporate landscape across the world. All those DEI, climate-friendly, woke initiatives, probably brought to you by BlackRock. And this isn't some crazy conspiracy theory. Larry Fink has literally said this out loud.
Well, behaviors are going to have to change, and this is one thing we're asking companies. You have to force behaviors, and at BlackRock we are forcing behaviors.
Okay, so what about Bitcoin? Well, Bitcoin doesn't have a board of directors or a diversity, equity, and inclusion mandate. It just does those things by having sound economic incentives. So who controls Bitcoin then? Bitcoin's first 7 years were plagued by this very question in something called the block size wars. But we'll get to that in another episode. The main question is, do miners who secure the network also control it? Or do the node runners who choose what software to run control it? Well, it's a bit of both. And that's what makes Bitcoin nearly unco-opable by a single institution. Developers create and propose updates for Bitcoin called BEEPs, or Bitcoin Improvement Proposals. These go through multi-year long arbitration processes between developers on testnets to make sure they don't compromise any of Bitcoin's sound money properties. Miners are then tasked with voting or signaling for these proposals at certain block heights. 95% of miners have to approve of a BEEP in order to alter or add to Bitcoin's codebase. And lastly, node runners are tasked with running this new software or updated version of Bitcoin. It is nearly impossible to co-opt all three groups of these people at the same time. Most of the time, these three groups can't even form unanimous consensus amongst themselves. And that's a good thing. This difficulty in arriving at full consensus ensures that nobody who is loosely informed about Bitcoin can sway the votes, nor does it allow anyone to sneak in a change to Bitcoin's code. Every little update is being monitored and put under intense scrutiny by every single other miner and node in the network. So why should you care? BlackRock has only gotten to control corporations as easily as it has because, frankly, corporate boards and shareholders are not well-informed voters. Individual investors' votes only represented 28% of their total shares, and they're never required to reach as high as 95% agreement to pass a resolution. Bitcoin does admittedly have an ownership base that isn't actively involved with its development. Passive ETF buyers, people who keep their coins on exchanges, and those who don't run a node. But Bitcoin also has way more at stake too, which is precisely why it was designed to require as much consensus involved as possible while still allowing for important changes and updates to the code to go through. Every time you set up a node and involve yourself in Bitcoin's future developments, you make it exponentially harder for BlackRock or any other institution to have a shot at co-opting Bitcoin. Until BlackRock gets a brainwave altering device in the homes of 95% of node runners and miners, they won't be changing the code anytime soon. Don't miss James Seyffart Backstage.
I mean, these things are the largest ETF launch in history. They have taken in $17+ billion as a group on a net basis. For the most part, if we just were on stage and Robbie Mishik of BlackRock was talking about it, a lot of this has been small independent REAs, like retail investors. We don't even have the huge institutions or the huge wealth platforms or the likes of UBS and Morgan Stanley and Merrill Lynch that have hundreds of billions of dollars, potentially trillions of dollars that could allocate. They won't allocate all of that, obviously, but even if they have the ability to allocate, and it's like 1% allocation across some subset of the funds, like that's a lot of money that can come online, and it's likely to come online via the ETF. So there's still another wave that could potentially happen over the coming years.
So how big of Bitcoin's total supply do you think might one day be held in ETFs?
This is very controversial. I mean, I think it'll be single-digit percentage. It's meaningful now. I think there's like just shy, I think it's 680,000 Bitcoin are in them right now. I mean, I wouldn't be surprised if we get to over 1 million. And those are just the US ETFs, which are the bulk of the assets across the globe. But there are ETFs in Canada, in Europe, and Brazil, and now Asia and Hong Kong. In some way, mainland Chinese investors can access those Hong Kong ETFs. Watch out. That could be some serious competition.
Treating Bitcoin legally as a commodity is a good thing for Bitcoin adoption.
I don't know. I mean, there's still too much unknowns right now. There's a lot of fighting between the SEC and CFTC about who has jurisdiction and who doesn't. So right now, I mean, obviously the SEC has jurisdiction for the Bitcoin ETFs, but they've let the CFTC because they actually call it commodity. Until we get some sort of clarity right now, I think Bitcoin has the most clarity on how it stands. These politicians with serious power that are here to talk to the Bitcoin crowd. So things might be changing. Probably are.
Yeah, it's going to get crazy.
I mean, I know there's a lot of Bitcoiners out there that are not happy that the Ethereum ETF got approved. They think it's a shitcoin. They think it's a security, the pre-mine, you name it. But at the end of the day, in my mind, it's been implicitly accepted as a commodity for years, ever since we got Ethereum futures. And right now, approving the ETFs just kind of confirms that. That said, the SEC still has a problem with staking. I have a feeling that Gary Gensler, if he had his way, he would call staking specifically a security. I think at this point, Ethereum itself as a token, as an asset is, as far as I'm concerned, it's a commodity. But Gensler doesn't seem to be giving up on whether or not the staking side of it is a security or so.
Will we ever see the Bitcoin ETFs be owned by these companies?
Probably not. I mean, so right now, if you look at Fidelity, they're custodying their Bitcoin through their Fidelity digital assets platform. That Fidelity is the first TradFi big player to get involved in Bitcoin. They got around before. They've been around tangentially in Bitcoin for a very long time. But you got to realize, if you're an institution, you don't want to hold your own coins. Like, you want to have somebody else that's taking care of that, because you can't just be an institution and have to be people with multi-sig wallets, like controlling billions of dollars of Bitcoin. You need some contracts. You want to offlay that risk. You don't want that on your book. So like, people think of it as a problem, but it's like, it's kind of almost a feature. There are a lot of people in the institutional world, in the RA advisor world, they don't want to have to hold those wallets themselves.
And what is a hot take or not consensus take you have about the future of Bitcoin ETF?
Right now, we're around 17 billion in flows. I think over the next 12 months, we'll see a lot of those big wirehouse platforms I talked about that have a combined $1 trillion in assets. I think we're going to see them approve these things for purchase, and I think that could be another wave of buying.